The message is stark. Households will come under pressure not seen in at least half a century. How will the property market fare as a result? Welcome to this edition of IG Trade in the Markets podcast. I'm Jeremy Naylor. We're talking now to Jeremy Leaf, founder of Jeremy Leaf and Company, London estate agents, and former RICS residential chairman. Jeremy, it's good to have you back on the pod. Let's start off with the obvious question and talk a little bit about the market at the moment. You're absolutely at the front, the pointed end, if you like, of all this. What are you seeing at the moment as someone that operates within the London residential property market?
Well, on the ground, we are seeing the market is a bit quieter than it was for most of last year, certainly, and even the early part of this year. There's no doubt that the energy prices and inflation and interest rate rises are having a hit on demand and activity. But the underlying resilience of the market still seems to be there. I'm asked frequently, what's happening? Is it going down? Do you see a sign of a slowdown? And thankfully, we are not really seeing that. And of course, there's various reasons for it.
Absolutely. Let's pick apart some of those reasons. And I want to first ask you about the recent rise in prices that we've seen. The rise in prices were much as a result of low interest rates as much as anything else. With interest rates rising, do you think that as an estate agency, sort of the group of you as a general rule, do you think that prices are now too high for properties? Do you think that agents and households themselves, when they're trying to sell a house, they're aiming too high? Do you think there's an argument to start looking at lower prices to bring houses onto the market and making sure they do sell?
Well, that's the age-old question, Jeremy. Almost any market, people always want as much as they can for their properties, and they're always tempted by somebody, whether it's an estate agent or a neighbor or friend, relative, solicitor, accountant, telling them, "Oh yes, you're underselling. You can get more for your property." But logic should determine otherwise. And certainly the increases that you alluded to are having an impact on realism and expectation. And we're certainly seeing on the ground that sellers are saying, and we're saying to them, are you sure you really think you're going to get that? Why would someone pay that much more for your property as opposed to anybody else's? And which is very, very similar. And why would it happen? And I think in lots of cases now, people are saying, well, yeah, maybe I was a bit too ambitious. So that growth, that steep growth in the pace of price rises has definitely leveled off.
What do you say about the current environment? As I said at the top, it's a very stark message we're getting from media at the moment. And I know media do tend to latch on to what they perceive to be the next big new headline, which at the moment at least seems to be borne out by the fact that you and I, as consumers, we're all facing this massive energy storm where we're told that Ofgem, because they've raised the price cap, is going to mean that we'll all be paying so much more for our energy, which of course is a large part of the household budget going into a winter in the UK. But do you think that the media coverage about where house prices are going, house price crash, mortgage repossessions, all these sort of negative headlines you're getting, do you think they're over egging it a bit? Or do you think there's an element of realism now beginning to creep into conversations?
Well, look, newspapers have got to sell newspapers or create headlines and get attention. We all know that. I think a lot of our customers have seen through, certainly in the Brexit and other debates, that the media have got a job to do as well. And it's certainly not on the ground, as I said, at the sharp
Mm.
end there, really having an impact just yet. It is reducing the numbers, and certainly it's going to hit people on who can least afford it, first-time buyers, those on lowest incomes, those with high loan-to-value mortgages. That's where it's really hitting hard. But those who have benefited from lockdown, haven't spent as much, and really lockdown particularly exposed unsuitable properties and relationships. Those are the ones that are still keen to get on. But of course, they don't want to pay more for something that they may be a little bit less lower in value a few months later. So they're negotiating harder, and so are owners.
How much into the mortgage market do you go? I know you're not a mortgage broker. I know you don't supply mortgages as such, but what are you witnessing there in terms of availability? Because when someone wants to buy and sell, there's a complicated process that goes on here, as we all know. Anybody
Mm.
that's done that knows that if you're involving a mortgage broker as well in all this and the discussions and the timeline and so forth, getting a mortgage, having it approved, making sure it's applicable to the house and the value of the house you're buying is all very important. Do you see that this is becoming a little bit of a bottleneck now? Do you think that mortgages are becoming a bit more of a headache for estate agents who would otherwise like to see free movement of buying and selling going on?
Well, it's a really good point, Jeremy, because you think when you've agreed the sale, and buyer and seller are relatively happy and they're proceeding, you'd think, based on past performance, the mortgage should be relatively straightforward. But there's a couple of issues there. Surveyors are now under pressure, or we feel they're under pressure in many cases, to value more realistically. And sometimes their opinions are based, I mean, I'm a chartered surveyor myself, so I have that,
Mm.
not that I do that many valuations these days, but they're under pressure to try and build in what's happening in the market, and interpret what they're seeing, and perhaps a bit more realistically than some of their customers. And also the lenders are under pressure. Of course, they want to make money by lending on their assets, but because of the lack of resources and delays previously, we're finding that the time to obtain mortgages has really gone up considerably. There's a real logjam, conveyancing logjam there, partly because of lenders and brokers and surveyors having these issues.
Just talking about the people you're selling to, who you're talking to mostly at the moment. Is it just ordinary, simple Joe in the street buying a house, or are you talking a lot more to people wanting to sell and buy rental properties, buy to let? Such a big part of the property market, we're told in the UK. I mean, I don't know how big it is for you, but I imagine in your part of northwest London, it's quite a big sort of market. Are you seeing any change in temperature out there for the buy to let market?
Well, yes, certainly. On the one hand, it's being driven by the increase. I mean, it's been a phenomenal increase in rents recently, and that has triggered more interest from buy-to-let landlords who can see a good return. But on the other hand, they have to take into account the tax and regulatory environment, and that has changed a lot, and it's changing still further. So that is really going to hit them. I mean, the net result is that it hasn't really improved the supply side, and if anything, it's falling, and that is contributing to the higher rents.
Talking about the regulatory environment or rather the legal environment, are you talking there about tightening of the rules to make it more difficult to make money out of buy to let? Is that what you're concerned about?
Well, yes, it's the licensing, HMO licensing, what might have been considered as standard letting, shared properties, two or three people living there, now requiring licenses. Also, tax changes are making a difference. The Rent Reform Act is coming. It will be more difficult to get rid of unwanted tenants if they're behaving, if in the opinion of the landlord and maybe other tenants in the same building, even when it's you think you've got an open up shut case, or when the rent is in considerable arrear, it will still be difficult to get tenants out. On the other hand, of course, tenants want to expect, or have a right to expect, a longer term commitment of the landlord to stay in their property. Those who are genuine and reasonable and quite happy to stay there, both sides would want that quiet enjoyment. So it's finding the balance between the two sides.
Hmm. Um, Look, you've been in this market, I know, since the early 80s. I think actually it's almost 40 years, isn't it? You're celebrating very soon, I
Oh,
think,
you're
as
making me sound old, Jeremy.
Jeremy Leaf
Please.
and part. Well, I mean, we come to you, and people come to you for commentary because you've seen it all before, if that's the right way of putting it. And you're a seasoned operator. You've worked your way through a number of different downturns in the past of varying sorts and varying degrees. I know, look, we haven't got into a downturn yet, as you just explained. The market is still relatively buoyant, albeit slightly quieter. With the headlines we're getting at the moment, are you more concerned now than you were perhaps maybe in that period that you and I were talking about before we went to air about the Myras business back in the late 1980s and
Yes.
early 1990s when there was that downturn? We went into recession, of course, as an economy in 1992. But the data then, of course, wasn't available for us to monitor house prices almost on a daily basis that we got now. How are you feeling about the next 2, 3, 4 years compared to maybe some of the feelings you had in the previous downturns that you've experienced?
Well, I honestly feel, I know maybe estate agents are eternal optimists, but I mean, I look at some of my work is investment development. I work with developers and investors, and they are still in the market. Okay, they want a good deal like everybody does, but they have longer term confidence in the market, and that the economy will still be there, and there are short-term reasons why we're in this mess, which have been well documented, and I'll leave that to you to explain. But the growing feeling, or the feeling which is there, and it hasn't really changed, is that after we get over this, things really won't be that bad, that the fundamentals are still in place. But there are other signs that people can look out for, short or medium term. Things like mortgage approvals, like we saw yesterday from the Bank of England. Now, they also held up pretty well. Market appraisals, what we look at, how many people, is there likely to be a glut of property coming on the market? Answer, no, not at the moment, no sign of it. Of course, interest rates remained so low for so long that not enough people, if you want to see more property coming on the market, are actually suffering and really hurting. Unfortunately, even though high loan to value mortgages are there, the bank has actually eased lending restrictions, as I'm sure you're aware, Jeremy. So there's plenty of signs for not necessarily optimism, but realism and expectation that we're not going to see a major correction here.
Okay, Jeremy, we'll have to leave it there, but thanks indeed for joining us. That's Jeremy Leaf, founder of Jeremy Leaf & Company, London estate agents, and a former RICS residential chairman. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.